Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable HEIKEN ASHI smooth price action trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. HEIKEN ASHI smooth price action trading strategy. The HEIKEN ASHI smoothed indicator is a modified version of the regular HEIKEN ASHI candlestick charts. A product of Japan, the HEIKEN ASHI charts are ancient and were brought to the West only a few decades ago. The HEIKEN ASHI is a type of chart used to analyze the price of a security. Unlike the regular candlestick charts, the HEIKEN ASHI candlesticks are used to understand the price trends. This is done due to the way the price is calculated and displayed on the chart. Unlike the regular candlestick chart which shows the open, high, low and close of the price during a session, the HEIKEN ASHI chart takes a different view. The open, high, low and close on the HEIKEN ASHI chart is calculated as follows. Close. This is nothing but the average price of the session. Open. This is the average of the open and closing prices and the closing price of the previous session. High. Maximum value of the high, open, and close. Low. Minimum value of the low, open, and close. What you can see from the calculation is that the HEIKEN ASHI price chart gives attention to both the high and the low as well as the closing prices. This leads to a different perspective on how the price is displayed on the chart. The HEIKEN ASHI chart can be applied to any time frame and to any market like stock, Forex, commodities, and cryptocurrencies. It behaves the same way as you would expect a regular candlestick chart to work. The differences between regular HEIKEN ASHI and the smoothed HEIKEN ASHI chart. You might come across claims that the HEIKEN ASHI smoothed indicator is a better indicator type compared to the regular HEIKEN ASHI indicators. While you can typically use the regular HEIKEN ASHI chart all by itself, the HEIKEN ASHI smoothed indicator is added as an overlay on the regular HEIKEN ASHI candlestick chart. By doing so, traders believe that this will give a better perspective of the markets. When price is trading above the HEIKEN ASHI smoothed indicator, it is said to be bullish. And when price trades below the HEIKEN ASHI smoothed indicator, it is said to be bearish. But the main difference between the regular HEIKEN ASHI indicator and the HEIKEN ASHI smoothed indicator is that the second type of indicator plots the HEIKEN ASHI candlesticks as a moving average. Thus, you can see both the regular candlestick or bar chart alongside the HEIKEN ASHI smoothed indicator. Parameters. The settings for the smoothed HEIKEN ASHI indicator is very simple. You can set the values of the two moving averages that are used. The moving average method means the type of moving average you want to use. Moving average method 1. Choose the moving average type to use in the calculation. Period 1. The number of bars to use in the first moving average calculation. Moving average method 2. Choose the moving average type to use in the calculation. Period 2. The number of bars to use in the second moving average calculation. You can also identify the colors of the candles. Up bullish candle. Blue. Down bearish candle. Red. One of the key characteristics of the HEIKEN ASHI smooth candlestick is that usually both in an uptrend or downtrend the candles have very little, but in most cases no lower shadows, while it poses extreme upward or downward. Interpretation. The general rule of thumb is that the markets are in an uptrend when the smoothed HEIKEN ASHI indicator is bullish or blue, and the markets are in a downtrend when the smoothed HEIKEN ASHI indicator is bearish or red. Buy and sell signals are generated based on this rather simple observation. You can see that the smoothed HEIKEN ASHI indicator shows the rising and falling trends with relative ease. How to use the HEIKEN ASHI smoothed indicator. One of the major rules of using this indicator is in determining the trends in the markets. It is a widely accepted principle that the trends change when you see two or more HEIKEN ASHI smoothed candlestick in the opposite direction or color. This is where traders either prepare to take an entry in the direction of the trend or the color, or they can use this to adjust their stops. Bullish and bearish signals are generated when the moving averages mark a golden cross, or when the short-term moving average cutting across the long-term moving average to the upside, and the death cross, or when the short-term moving average cutting across the long-term moving average to the downside. But as with any trading strategy, using just one indicator will not give you the market perspective. This is the same case with the HEIKEN ASHI smoothed indicator as well. You will probably need to use other methods such as price action to determine the best momentum in the price of a security. Conclusion. In conclusion, the HEIKEN ASHI smoothed indicator is a versatile trading indicator that can be used to build a new trading strategy, or it can also be used to complement your existing trading strategy. The HEIKEN ASHI charts are a great way to get a different perspective of the markets. It can help you, especially when the trends are strong, and can also depict ranging markets when you can see the HEIKEN ASHI candlesticks changing color, but price trading flat. Price action trading strategy with smoothed HEIKEN ASHI indicator. The HEIKEN ASHI smoothed indicator is really an indicator designed as a standalone trading system, but in order to improve the performance of the indicator we're going to add the 200 period moving average, because the 200 EMA is considered to represent one of the most trusted moving averages. Going forward, we're going to lay down an effective price action trading strategy using the HEIKEN ASHI smoothed indicator in combination with the 200 period EMA. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Trading rules. Only buy above the 200 period EMA once you have smoothed HEIKEN ASHI candles pointing to the upside. Conversely, we're going to sell only below the 200 period EMA once we have smoothed HEIKEN ASHI candles pointing to the downside. Please ensure you fully test the rules so you can do them without thinking. Selling rules or short position. Rule number 1. 20 period smoothed HEIKEN ASHI crosses the 200 exponential moving averages to the downside. Rule number 2. Wait for price to rally back to the 20 period smoothed HEIKEN ASHI. Rule number 3. Wait for an obvious price action confirmation sell signal or setup to form in the market. Once you enter the trade, you can set an initial stop loss above the previous smoothed HEIKEN ASHI candle. Buying rules or long position. Rule number 1. 20 period smoothed HEIKEN ASHI crosses the 200 exponential moving averages to the upside. Rule number 2. Wait for price to rally back to the 20 period smoothed HEIKEN ASHI. Rule number 3. Wait for an obvious price action confirmation buy signal or setup to form in the market. Risk-reward ratio. In many cases, market strategists find the ideal risk-reward ratio for their investments to be approximately 1 to 3, or 3 units of expected return for every 1 unit of additional risk. Here are other examples of the HEIKEN ASHI smooth price action trading strategy to fully understand this wonderful strategy and to make the most out of it. Technically speaking, you can use this indicator for all time frames. However, the shorter the time frame, you will see more fluctuation and possibly more whipsaw, which may cause small losses that can eat up your portfolio quickly. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.